Gautam Shah is with us, founder and chief strategist, Goldilocks Premium Research. Gautam, good to have you with us here. Thanks for your time. So we've seen a 1,200 point sell-off in 4 days flat, Gautam. And I was saying earlier that these are part of the game, but we're not used to these now. So it seems the shock seems a little bit larger. What's your sense? Price structure, price action? Where are we near term?
Good morning, Prashant. I think that's the problem, that we have now been wired to believe that every time the market corrects, it will find support levels quickly, turn around and go on and make new lifetime highs. But if you look at the trading action of the last 7 days, what's really happened is that it's been an India-specific correction. You know, most other markets in the world, whether you look at US, Europe, or rest of Asia, actually have been quite well. So it's been a completely out-of-the-box kind of a decline for India. Now, you could allude it to many factors, you know, the return of China, geopolitics, FII selling, a lot of factors can be looked at. But honestly, looking at the charts, it does seem as if this is not a garden variety correction. Because I think last month you had a scenario wherein the large caps and the headline indices did extremely well, and the small caps and mid caps did absolutely nothing. And the manner in which the indices have come off, the fact that some key levels have been broken quite easily, I do get some sense that the recent high could be a short-term top. So while there is scope for some pullback, which is happening today, and it could extend to maybe at best 25,500, 25,600, I do believe that the markets have got into a multi-week, maybe even a multi-month consolidation. Not to say that we will collapse. I think the domestic liquidity angle will keep the market protected, but I'm pretty sure that we are not going to make new highs in a hurry. And I don't see leadership, because banks are back in a difficult space. Reliance has lost its way almost completely. It's just the IT index which is hanging out, and the metals index which continues to be positive. But on an overall basis, the market has got internally weak, and therefore the next few weeks will be challenging.
Okay, so next few weeks will be challenging. Maybe this is not over. I'm very curious to understand what's a garden variety sort of correction in China. Gautam, morning, Surabhi here. We've heard of spinning tops and this, head and shoulders and all of that in technicals. What is garden variety correction?
No, from a Chinese perspective, I think we've been in a downtrend for 3.5 years, and from a valuation perspective and the allocation that China got over the recent years and what India got, I think it had come to a point wherein the snap out had to happen, and that snap out has happened. When I say garden variety, I mean that we are used to seeing a 3, 5, 7% sweet correction. The market scares all of us, comes back to support levels, turns around, and therefore, all is well very quickly. This time, all might not be well quickly. And that's probably the reason I'm saying that it is slightly different to what has happened in the last 12 to 15 months. So prepare yourself for slightly more difficult times and don't jump at the first sign of weakness or strength to buy the market.
Oh, that's really important, Gautam, and I'm glad that you put that on the table very clearly. Now we understand it's not a walk in the park correction. It's not a garden variety correction here in India, probably. So in which case, immediate levels, and then how do you expect this to play out? Because you're right, the market's forgotten what a real correction looks like. 5% down, and there's this gloomy feeling out there. What are you expecting next in terms of levels? Just how will this play out?
See, I think the market breadth has been weak for the last 4 weeks. I think the number of stocks which are actually supporting this market, the number of stocks making new 52-week highs, that had reduced considerably. And given the geopolitical situation and given the way crude is placed, I think crude and dollar index are two global factors which I think will play a very important role to what global equity markets and India does over the next 2 months. I feel there is a high probability of crude actually flaring up $10, $15 from here. So that's one risk which I think the market is trying to discount. But coming back to the levels, I think the 24,800 number is quite important from a near-term perspective. If that were to break, you might have to be prepared for levels of 24,000. But in the last 3.5 years, since the time we started rallying from the COVID lows, we've seen multiple times that the Nifty has done nothing for many weeks to many months. So it's not really a surprise. And I would be very happy if over the next 2 to 3 months, we just stay in this 24,000, 26,000 band, oscillate between greed and fear. What has to correct, which is extremely richly valued, will correct, and top quality will continue to sustain and continue to attract good money.
All right. Hi, Gautam. Good morning and good to see you, Ben. Let's talk about the largest constituent on the Nifty. That's the banking names. The Nifty Bank gave some promise. It gave us the feel it wants to go past the 55,000 mark, but then it's seen a sharper correction. What's the view out there? What are the markers you're looking at in the levels on this index?
Well, that's been the problem, Nigel, because every time the Bank Nifty does well, we start feeling that we are getting into a multi-week, multi-month kind of a uptrend, but it falters. And the problem is when these two or three heavyweight stocks don't sustain at high levels because of FI selling or whatever reasons people attribute to. I think that's the problem, because when the banks don't do well, it's difficult for the Nifty to run. And given the way it's corrected in the last 5 to 6 weeks, I think the structure has spoiled once again. And I would say it's a high probability of the Bank Nifty coming down to levels of 49,500. And if that were to break, you could see another 3, 4, 5% correction on that index. So banks is something which I feel, is not going anywhere. It's not going up much and it's not going down much. But I think the two major pockets that we like in today's market, where I think one can look at longs, are metals and IT. I think these are the two places to hide while this difficult corrective phase continues for a while.
Metals and IT are hiding spots. Okay, let's talk about individual names, Gautam, if you will. From a positional point of view, what looks good?
Well, I think the entire metals basket saw a lovely breakout 10 days back. I remember, last month we were discussing that the fundamentals were not great on the ground. So how can the metals index do well? And then you had the China news flow coming in, and that pretty much triggered the breakout, not just for metal stocks here, but worldwide, and including the China comeback. And I do believe that the metals index has the potential to deliver 25% upside from current levels over the next 1 year. So if you look at all the top stocks, led by Hindalco, JSPL, JSW Steel, SAIL, Nalco, Tata Steel, the entire set looks very good and I think is likely to stand out. So if you're booking profits in some other pockets of the market, I think metals and IT is the place to be in. And in the IT, I want to stick to top quality. I don't want to go to grade 2, but I think Infosys, TCS, HCL Tech, Tech Mahindra, I think are good pockets to be in.
You mentioned crude, Gautam, crude and dollar, two key things that you're watching. Tell us the other indicators. I mean, on China itself, I don't know what you've seen on the charts. I mean, the Hang Seng, for instance, has pulled back 32% in the last 1 month. It's a ferocious comeback, right? Do you see that kind of strength continuing in the Chinese market? And what else? I mean, what else could be very critical global indicators to track from our perspective?
See, I think this China comeback is durable. With whatever little I have an understanding on China and Hong Kong and from the charts, I do believe that this underperformance had to get corrected and it's now happening. And no wonder the FIs are excited because they have a market which is, very, very cheap even at these levels. They have their own issues, no doubt about that, but it's still cheap in the global context. And looking at the charts, I do believe that the Chinese market can appreciate 20-25% quite easily, even from current levels. There could be some near-term correction, but the overall trajectory is clearly up for China and Hong Kong. And I think if you look at the crude, I think 65 has been a sort of a base level for crude for the last 1 year. And we've rebounded from that multiple times. And given the geopolitical situation, which can easily get out of hand because nobody really knows how that's going to pan out. But the crude chart is telling me that you could easily go back to levels of 1995. And if that were to happen, I think it's a key risk for India. And if you look at dollar index, it's had a beautiful inverse correlation with the S&P 500. And with the comeback of the dollar index from levels of 100 last week, it looks like, even this index is going to move towards 106, 107, maybe even 110. If that happens, I think the US markets will also correct because US markets have shown a lot of resilience in the last 1 week and handled the geopolitics really well. It might not be the case over the next 2 to 4 weeks.
Okay, all right. Well, Gautam, you're sounding fairly cautious on the Indian markets early this morning. Crude spiking, dollar index moving up. Well, it'll be good if we can hold on to the 24,000 mark, I would say, give and take everything if this has to come through. Let's talk about the biggest party in town. It's been in the mid-cap space, right? What's the view on those indices? Because if the headline index is going to be under pressure or going for a bit of consolidation, then we could see a bit of a pullback out there. And that's been the index that's really run up. So your view?
I'm quite concerned about the mid caps and the small caps, to be honest. We put out our big picture report yesterday, wherein we put out so many pointers as to why we feel that mid caps and small caps could potentially be topping out for the near term. And I think they need a multi-month correction or a consolidation at least before things can get back on track. We've all discussed it in the last 1 month that based on narratives, stocks were doing well. Based on Excel sheets of the next 10 years, stocks were doing well. I think there is a reality check which is now coming up. And I think anything that is substandard in the mid caps and small caps which will come under serious selling pressure. But the top quality, the top 50 names in mid caps and small caps, I think will stand out. But the chances of a 7 to 10% correction in the mid cap and small cap space looks quite likely given all that has happened in the last few months.
Okay, so once again, since we need to pad up for the slightly longer haul, metals and IT, anything else? And now I'm asking about someone who's looking for that dip, right? There are so many people complaining the market's not correcting, not correcting. So this is happening for anyone looking at medium-term portfolio creation, say the next 2 years. Apart from metals and IT, what else would you advise, Gautam?
Nothing at all, Surabhi, because, we do a sectoral analysis, and I think a lot of earlier outperformers like auto could have topped out, real estate could have topped out, PSC could have topped out. This entire basket of mid caps and small caps are looking a little weak. Pharma, we like it from a 2-year perspective, but near term, it's looking very stretched. FMCG has seen some negative signs. So actually, I don't see too many places to hide. And, the funny part is people wait for that correction. And when it comes, people back off. I mean, that's what psychology and sentiment does to all of us. But let's keep our numbers in mind. The good thing is this is not a major trend reversal. This is still a larger correction within the bigger bull market. So I think if we do nothing over the next 2 to 3 months, and if the results season, earnings season go off well over the next 2 to 3 weeks, then we are on our way because the Nifty is still at a 24 PE. And over the last 30 years, we've never seen a major top at a 24 PE.
Got it. All right. Thanks a lot, Gautam, for joining in and giving us your insights into the Indian market. We look forward to chatting up with you rather soon.